Hi everyone, Tessa Lamping here. Today I just want to record my September recap. Nothing super exciting, but I'm really working on my goals for the month of October so that way I can start really growing my account. I've been trading with Schwab for a couple months now and gaining a lot of confidence. Let me start with uh, my month. If you're wondering what I'm using Trader Sync on my online trading journal. I use the Elite version. I'll leave a link below so that way you guys can check it out. I absolutely love Trader Sync. So here's my September. I have small trades still. In the beginning of the months, it seems like the first day or the first week I've been usually red. And you can see I had one really big loss day, but I was able to make it up, no problem. It's definitely more green days than red days, but just trying to be consistent. I lost discipline during this month, trying to trade different setups a little bit, and I just want to really start growing my account so that way I can size up and just grow. If I go to the monthly, and you can see I made $103.73 in September. That's, well, Schwab doesn't have commissions, but I did take a trade with E-Trade, so as long as I stick to Schwab, I'm more profitable. It seems like every time I trade with E-Trade, even if I profit, I still end up with a loss because my strategy involves scaling out, and that doesn't work with E-Trade because the commissions are so much. I mean, if I had a bigger account, they wouldn't be a big deal, but I do have a small account that I'm trying to grow, so it all adds up. But as you can see, I just had a couple red days, which aren't too big a deal, but my green days were a lot better, which is really nice for growing my account. This, I guess, so this is when I first began trading. I am still down $1,300 overall because of E-Trade's commissions over the years. I thought I was making enough to cover commissions for a while, but then it turns out I wasn't. This was at 1,500, so, or what's my peak? Yeah, right there, I was down a total of 1522. So ever since I switched to Schwab, my account's finally at an uptrend. As you can see, it's uptrending. Slowly but surely. So let's see, oh, that's just for the month. My biggest profit was $40, biggest loss was $23. My overall losers, my overall on all the winners, without or before commissions, after commissions. My win percent for September is 54.5%. I was losing 38%. I broke even 6.82%. My accumulative returns have been growing. My biggest profit was 10%. My biggest loser is 12%. But that is a little bit tough when you're scaling out because I'm not sure how, maybe they calculate it by the averages, but ever since I started scaling out, my percent winners have changed drastically because when I'm taking a loser, it's usually with full size, and when I'm taking winners, I'm scaling out. So I'm thinking that's how my big losers happen. Plus I think it goes off of the core, but I just know that ever since I started scaling in and out, my percentages have been off a little bit. So that's something to consider, because like how you can see averages on winners and averages on losers, that's what I mean. So my biggest profit, it shows 10%, my biggest loser is 12%. So how can I have that if I'm averaging 2 and 3%? Well, that's because scaling out. So that's what I'm referring to. Also, it shows my average on winners versus my average on losers. Now, I do want to keep my average on winners larger than my averages on losers. I believe dollar-wise, percent-wise, ideally too. But like I said, I'm new to scaling in and out, or I scale out, but I do quick adds in and out. So I'm learning the differences between that now, because it was my goal to make sure my average winners were double my average losers, and same with the profits and stuff like that. But now I'm seeing and learning how that affects my trading with the whole scaling out. Total of 44 trades, 24 winners, 17 losers. My profit factor, which break even gross profit dividend by the gross loss. So I don't know exactly everything that this stuff means, but well, average number of trades, so I'm taking 2.32 because of all the scalings. I've been holding a lot longer now. My average losers, so this is what I think is really cool, that my winners, I'm holding a lot longer this time. It used to be when I held my my stocks longer, they were always on the losers, but now it's changed because I've learned my favorite pattern a lot more, which I'm still improving on, but now I know pretty quickly if it's going to be a loser or not, and so my losing time is a lot less versus I'm holding winners a lot longer because I'm letting the trades play out. So that's really neat to see. I've paid total in commissions and fees. And that's E-Trade. So that's really cool about all that. And what else do I want to go? Was it I think it's the evaluator. Yeah. So I love this because OTC panic dip buys, they used to be my favorite pattern, but they just haven't been very hot lately. But a pattern I'm really working on is this spike consolidation spike pattern. And it's definitely a choppy ride, as I learned, because you can see it spikes, it consolidates. I would want to buy right there and then hold this and sell into strength, risking right here, and then hold through this consolidation. If it goes down to VWAP, then I would add right down here, but it's still going up, so I'd sell more into strength. Maybe since it held this, I could add a little bit there and sell into strength. This is what I'm still learning, but this is just my growth chart for the spike consolidation spike pattern. I was up a total of $618 on the profits of all of it, but as you can see, all these random trades I have marked as not available because I don't know what they are. And you can, gosh, if you've ever watched Timothy Sykes, what is it? Oh, shoot. I think it's the Short Stocking DVD or New Rules of Pennies. No, shoot. I need to watch his DVD some more. It's actually been a while because I found my niche. But there's a DVD. I'll go through my DVDs and I'll click the link below where he goes through all the different chart patterns, and you can see like this is a stair step upwards or a breakout, And this is like a crow pattern where it just fades off, and it's a stair step down. So this just shows you, if I stay disciplined, and you guys need to track your setups too. And I love this evaluator on TraderSync because it flat out shows me that every time that I just trade something random that I can't identify and I put as not available as the setup, I am losing. So far, I've lost $475 basically. 175 trades that I have not been able to identify what the setup is, and it proves itself that if I can just cut out doing this and just stick to this spike consolidation pattern, I am about to go parabolic and just really go. I mean, at first, yeah, I lost money on this pattern, but I've been really, really, really wanting to understand this, and it's showing that I am making progress. So if there's a lesson to be learned from tracking your setups, it's definitely focus on one pattern that's working in the market, and you won't know if it's working right off the bat until you try a few times or until you've seen it in different markets. Like, the reason why I stopped buying panics is because I noticed that they stopped working, so I started going to this setup. Maybe one day this setup's not going to work for a little while, so I'll have to go to maybe a morning panic pattern again or something else. But it really helps you see the trend of the market and your strengths and weaknesses based on what setups you're tracking. So I highly recommend you track your setups. This is probably one of my favorite features with TraderSync because it's really helping with my growth, and it will really benefit you too. Also, I want to go up here. Let me click out of September. Well, here, let me go over some charts and then I'll compare my months with you guys. Oh, as you can see, here's my account performance too, here in September. So that's really cool to see that, yeah, I keep getting red at the beginning of the months, and then near the end of the months, I'm growing, like middle of the month to the end of the month. So I'm using larger size here in October, so my losses are bigger dollar-wise, but percent-wise, I'm still managing about the same percent losses. So my goal for this month, since I've been ending like the past 3 months roughly around $100, I want to make $1,000 this month. But I'll get into that in a little bit. Let's go over some charts here. Some 9% loss. So we can go over BBBT because that's let's see, September 10th. And this is stocks to trade. I love stocks to trade. This is how you can see my watch list over here. I can also leave a link to how I create my watch list. You can see I have multiple ones. I have my alerts, I have my back burner watch list, ones that I'm watching, and then these are the ones that I'm actually looking to trade, these 3 watch lists. So BBBT, let's do custom September 10th. Man, this is a beautiful setup. I mean, there's the perfect spike, consolidation. Ideally, I buy right here when the volume comes in. I sell some into strength, hold this consolidation, sell more into strength, hold it. Depending on where VWAP is, only add on VWAP on a dip, and then sell into strength and sell into strength. Now I'm wondering why I lost, because honestly, I don't remember this trade and I don't see how I could have lost. So this is I bought in the morning 0623. see. Oh, okay, so I messed up on the times. Let's see here. Okay, so yeah, I messed up on the times. I put the times in wrong. So I bought up here. So let's see. This is what I also love about Treasure Sync is they put arrows where the time is. So when I type this in, I think I did this one manually and I put the wrong, I didn't put the times in. So actually I do remember this one because, okay, it had the spike, it consolidated. I should have bought the breakout right there. And like I said, slowing the strength, slowing the strength. So what I actually did was, let's see, 0662, is that what it said? 0623. 06. Nope, it was right here. Okay, I actually remember this trade. So I have to admit it. I had FOMO and I didn't get in right here, didn't get in up here, didn't buy the dip. I didn't see anything. I should put not available, but because it's a spike consolidation spike pattern, I put that's what it was. And let me guess, did I put that I chased? FOMO, excuse me, FOMO and chased. Exactly, I could call it because if I didn't buy right here, which is the only trigger I can really see, I chased it. So I was convinced that, or trying to convince myself because of FOMO, that it was going to consolidate right here and spike up. So what did I do? I bought right here, or 623, so right in here, and wanted it to go up, but instead it went down. Where did I cut it? What time is that actually? So 318. We'll put 318. 318. And so that was, let's see, 055. So we'll go 332. And so 332. Right? Both. Let's see. Yeah, 332. So that should have changed it down here. Yep. There we go. So see, I typed in the wrong time before and I didn't add a time. So here, now I added the times and you can see right here, I bought right here and I sold both the stocks right in here because it cracked below right here. This is where I was risking and it broke below that risk, so I cut it. But yeah, ideally I was getting greedy because I was trying to convince myself that it spiked, was consolidating upwards and was going to spike out, but I was 100% wrong. This was the only entry, maybe an ad right here to sell into strength, but this right here, can't stress it enough, was the only real good entry. And you can see that the volume was there too. With the volume, and it was a big first green day. So I can see why I lost because I got frustrated and FOMO'd and wanted something that wasn't there. So that's my biggest percent loss. And so 10% gain AAGC. But that's the pattern that I'm going for. Did I seriously not type the time in again? Oh goodness. Okay, so this was September 8th. Oh, as a matter of fact, I looked. Huh. Okay, so this one was just a morning strength. What did I type in as the pattern? Morning spike, which is a pattern I should not be trading right now. You can see it was the first green day. Okay, so I did put the time in correctly here too. So you can see it right here. I sold right here, or bought right here in the morning strength, which this is definitely a chase. Well, it is and it isn't. I don't know, but it was just so quick that it just, I can't replicate this too often unless it's in a hot market where morning spikes are really working. And I really wanted to try a morning spike, and just because of the sub penny, that's why this quick trade is 10%. And then so you can tell that I bought in the green and I sold in the red, but what's this orange? So the orange is what I try to do for break even, because I consider this spike consolidation. When it broke out of this level, this sideways price action, I bought right here. Didn't have huge volume, but I tried it because sometimes they'll spike in the morning, consolidate, and then they'll really go crazy. So it was worth a shot, so I simply got in and out in the same price right there. But I made a profit, 10% right there, real quick in a couple minutes. Those were the trades, and just because we're here, let's see, NSPX, I missed my entry right here. I called it in the chat that I was looking at this, I wanted to buy it, but simply right here at 0.0042, it skipped on the bid, or the ask, because I was going to smack the ask and buy it right there, but then it just went to 0.0044 or 43, and I was like, well, shoot. Then the level 2 is all funky, then it came back, and I was tempted to dip buy it, but I'm like, the level 2 is just so weird. So I didn't buy it, and then I regretted it, and I was really frustrated. And I was also watching TGGI, and I was also frustrated because I was a little late finding this, and so it spiked right here, consolidated, was getting tight right there. I would have risked possibly 0.009 or even 0.0094. Buying 0.0096 is where I wanted to get in. I was going to type in my orders and stuff to get it ready, and it just took off without me. That was really frustrating too. Congrats, Mariana. She was in right here at low a day risking break even. That's not my strategy. Every time that I get in on a first green day that low, it ends up panicking. And that's actually, might as well just get into this, and I'll probably recap it for October too. But let's just go 5 days. So I guess it was just yesterday, but I tried that on Fern yesterday and I messed up. So it spiked right here. I thought it was consolidating and gonna spike. I got caught. I was risking the low. I broke down right here, or I sold right around here for like a 3% loss. And then it ramped up. So that's why oh, I got rid of it. Wait, right here. So that's why I don't like buying in the mornings, especially when it's at the bottoms or when I think it's going to be a first green day, because then this happens to me. I was actually up for like one tick and then it went down. And so I'd rather wait for it to go from red to green, which I didn't get on this one either, because I was like, you know what, I'm going to be disciplined. I already screwed up right here, and so I'm not going to screw up right here and break my rules. But yeah, so that's why I want to go to my notes for this month. My goals for October is for one entire year, I'm only going to trade the spike consolidation spike pattern. This can be on any time frame, whether it's a couple minutes, 5 minutes, 15 days, a year, whatever. just that pattern. I want to make $1,000 in October with one pattern. Like I said, or like I was showing, had I just focused on this one pattern, I'm gonna go parabolic. I know it, I'm gonna break out and it's just gonna go up from there, but I have to stick to one pattern. Cut only when it breaks my designated risk. What does that mean? Well, a lot of the time, so say like I enter an SPX right here and I'm risking right around here, 0.0039, and I'm in at 0.0042. So when it comes back down here to 0.0039 and it holds, I should not cut just because it touched my risk level. It did not break through. So what I think I'll do is I'll put my risk for a tick under my support level. That way, and then maybe if that holds too, then I just buy back in if it shows strength like this. So I don't want to cut just because my risk level is tested. I want to cut when it breaks and just deal with it or calculate the slippage into my loss. But that way it's not touching my risk and I'm cutting. I can hold it for when it does stuff like this, because it happens often where I'm cutting when it gets close to my risk or hits my risk, but it doesn't break through because my risk level is usually a key support. So it's a key support, which means more than likely it's going to get tested, and when it gets tested, if it holds, then that's a good thing because it can keep going like this. But there's also a chance where it tests my key support and it cracks below it. I would cut right here. So that's because it's under my risk level. And that's what I want to do. Yes, it came back, but I could either choose to buy back in when it reclaims, but ideally I'm buying right here. I lock in some into strength because that's another thing I want to get into. So only when it breaks my designated risk, and then I want to sell 1/4 or 1/3 when the stock spikes to 1R. Sell the next at 2R, hold through the consolidation, sell more at 4R and 5R. So what does that mean? Well, $500,000, you should go follow him on Twitter. He's pretty awesome. He was kind enough to explain his understanding of R, or what he learned R meant thanks to Gritani and Huddy, which they do explain it, and I must have forgotten about it, but $500,000 was kind enough to re-explain it to me. And so, like, say I'm risking 0.0039, I'm in at 0.0041, and also Stratty talked about this with me too, but I didn't realize, or maybe I need to go back and read the messages, that it was considered R. Because Stratty told me that, like I said, if I'm risking 0.0039 and I'm in at 0.0042, you go 3, so 39, 40, 41, 42. So that's 3 ticks. So if the stock spikes from 4.2 to 4.5, then I want to take off a 1/4 or a 1/3, so that way if it comes back down, then I'm basically taking a smaller loss or break even, and I guess that is what's considered 1R, because it's the same amount up as it is down to my risk. So I guess that's 1R. And then if, let's see, goes from 5 to 8, then I take off some more because that's 2R. At least from my understanding of what they both have told me. I could be wrong, so if I'm wrong, leave comments below and be happy to correct me because I'm still learning as well. But yeah, I'm just learning to hold longer and wait till it cracks my support level. Next, I want to add when the stock dips to VWAP or holds the designated risk support level. So that's where I was saying, like, maybe it spikes up here. I don't know if that would be an ad or not because it's too soon, but it could be because it's held my support level and then sell the add into strength but holding my core position, or maybe it's just adding to my core. And then when it comes back down here to VWAP, I could add right here and sell some more into strength, or maybe add here and sell into strength. But I definitely cut it right here. But why wouldn't I add if it spikes out? Because every time I see the consolidation and the volume come in and I add right here, it tanks on me. So as Kimmy trades, go follow her too. And Stratata, I'm not sure how to pronounce it, but Stratty, they're wonderful to learn from because Kimmy was saying to add on dips and dips near VWAP. So this is what I'm learning as well. And then you sell the ads into strength. So you have your core position and then you scale that out, and then the ads you basically scalp. You quick trade them. And that's just something that I'm working on and I really want to get better at. So I figure if I spend at least 1 year of just focusing on this pattern, I can't get worse. Next, the risk is not a risk, but rather a support. Cut when that key level cracks, otherwise add when it holds. I had to change this a couple times last night because I was saying when my risk holds, don't cut it unless it if it breaks below. So just the way I worded it the first couple times, it wasn't right because words matter, and I wanted to create a business plan. Basically, I'm telling myself I'm an employee of my company and these are my rules. If I break these rules, there's consequences. So if this is my winning formula for becoming successful at this pattern, why would I do anything different? So here's what I'm testing. If I need to change it, I'll write it down below so I can also do a blog post in the future comparing how I've changed this strategy over time and created my winning formula for trading this pattern. So the risk is not a risk, and I call it the risk because putting my risk was too emotional. So I just put the risk is not a risk, but it's a support level. So if it hits my risk, I'm trained from Tim Sykes to cut losses quickly. So if it touches my risk, I want out. But if I say the risk is not a risk, but rather support, and cut when support cracks. So just because this is support 0.0039 doesn't mean I'm risking 0.0039. I'm risking the crack of support. So if this held 0.0039, that's not my risk, that's support. It cracks it, I'm out. Yes, my loss might be bigger than just what it would be right here because of slippage, but I feel like that's trading the pattern better. Yes, it cracked and then it came back. That'll happen, but it could also keep panicking, and I'd rather get out when that trend seems to have changed. And that's just how I feel safe. Also, you could just risk this level, but to me, I'd rather have more shares with a tighter risk than less shares with a wider risk. But it's totally up to you. But that's just how I feel more comfortable trading for now. Maybe it'll change in the future, and I'll have it there to track it. Also, if you guys have made it this far, I'm really excited. Me and the gals have been working on a project, and they've been testing it for me, and I am going to be excited to release something super awesome that will really help you guys. And I just want to thank the girls for helping me test it before I launch it. So make sure you click the like button, subscribe, ring the bell, so that way you get notified when I come out with this announcement that you're going to absolutely love. I'm so excited to share it with you guys, and I'm so grateful for all the help with this. It's been a team effort, but I'm so excited to launch this for you guys. So that's in the works too, and I can't give all the secrets yet because I still have to do a whole bunch of stuff for it, but I'm just so grateful for such a helpful team. Um, Anyways, oops, wrong one. Let's get through my notes real quick. Um, so this is a little psychology thing that I wanted to do. Trade only first and second green days because those have the higher odds, in my opinion. And I want roughly around 1,000 minimum positions. As long as I have a tight risk, obviously, if I have a wider risk, my position won't be $1,000. But if um, I can keep it around $1,000, then I'll definitely grow. And if I can't have $1,000 minimum, my risk is going to be roughly $30 because that's 3% of 1,000, or if I have to do a 500 position, that's 6%, stuff like that. So just if I have to do a wider risk, it'll be $30. If I can do a tight risk, I want $1,000 minimum position. And if there's no pattern, simply no trade. If I miss my entry, no trade. So if I missed this, I could have bought in right here, and I thought about it, but I convinced myself that the level 2 I didn't like it. Plus I had to go run some errands with my mom and go see my grandpa, and it wasn't ideal to trade because the internet traveling wasn't very good. But anyways, I hope this was valuable for you guys, and um, this is my September recap. I also wanted to show one more thing. Sorry, I didn't plan this very well. So let's get rid of this, and so this is with commissions for a while with E-Trade. So holy crap, I had a $500 loss one month because of the commissions with E-Trade. This is why I switched to Schwab, because as you can see, yeah, it would have been a $232 loss instead of a $500. And you can actually see without E-Trade's commissions, I would have been fairly green on the months and even had a $260 winning day. But that's really honestly why I switched from E-Trade to Schwab, because this is just ridiculous. Oh my goodness, I could have had a $600 win day, but instead, because of commissions in December, or sorry, I could have been up nearly $700 in December, but because of commissions, I was, I lost it more. Wow, that's kind of frustrating. Yeah, so I ended up losing the month because of commissions. Oh my goodness. So let me get just back into year to date. Apply dates. Ugh. So I, oh yes, I'm currently down $65 in October, but like I said, that's just like 2 losses because I'm using bigger size than all of these other months. These were 3% losses, so that's just currently, I'll probably be green as long as I stay disciplined with my rules this month. But as you can see with commissions this year, I was down a lot, and that's what it would have been without commissions. So as you can see, I switched to Schwab for in a little bit in July, and I've had it since August, September, and now in October. And it just makes a huge difference. I mean, it doesn't look like a lot, but psychologically and when you're learning, it's a huge difference. And so I had $100 in July, almost $100 in August, and $100 in September. That's why I feel like with this consistency and without commissions, that I think that I can handle sizing up, because when I first started with these months too, I had red days in the beginning of the month, and like I said, near the end of the month, I became green. So I'm hoping that I can make $1,000, or my goal is to make $1,000 this month and start doing what I'm capable of, because my results show that I'm fairly consistent as long as there's no commissions involved, because commissions kill me. But I just wanted to show that comparison. And so, like I said, if this video is helpful for you guys, sorry it's so long, leave comments below, hit the like button. How did you guys do in September? And if I if I didn't explain the R properly, please correct me below, and let me know if you're excited to hear what I'm gonna launch soon, because I'm really excited to show you guys. Make sure to hit subscribe and ring the bell so you get notified when I launch this really exciting and helpful tool. I think it'll bring you guys a lot of value, um, and will really help you with your guys' trading journey, because that's my goal, is to help you guys grow too. Thank you.